Hello, I'm Devansh, and today I'm going to talk about very interesting thing for every savers and investors. So let's start. So you know that this is a time for corona. So this news is based on how to manage wealth effectively during the COVID-19 crisis. Firstly, you need to know a black swan event which was unpredictable, that is COVID-19, has shaken the entire world as no one was prepared for this pandemic. And this COVID-19 shut off the economy all across the globe, has created financial uncertainty. The pandemic has left the investor worried not only in India but all around the world. So this is the very big problem, and it has also increased the rate of unemployment, which makes people in shock. Recession is something that look inevitable. People don't know how to react and what plan they should adopt to protect their family's future. The pandemic has left the investor worried not only in India but all around the world. With market being volatile, many of the financial instruments are generating negative return. What adds to worry is the uncertainty about how long this pandemic is going to last. The entire situation is going to have negative impact on the world of investors. Therefore, having a robust strategy to manage one's wealth, not only with the objective to secure the capital but also to generate desired return, is the need of the hours. Being an individual investor, you can follow these smart tips to manage your wealth effectively, not only during the COVID-19 crisis but beyond that also. So first is evaluation and defining of your investment portfolio. Considering the current portfolio, first you need to know, first or foremost thing, you have to accomplish your investment goals. Firstly, you have to set your milestone, and then you have to do planning and then investment. So how will you do planning? Firstly, the sudden outbreak of COVID-19 has eroded the investment of numerous investors. In such a case, the first step that needs to be taken to manage your wealth is to evaluate, redefine and reassess your risk appetite, how much you can take risk. The second is style for investment, the style you adopt for making investment and your level of comfort which you feel good for you. And the other thing is proper asset allocation mix of multiple asset classes that are not correlated is essential to diversify the risk. There is also the golden rule in investment, not to put all your eggs in one basket. The other key requirement for appropriate management of your wealth is to invest for a longer period. If you will invest for shorter period, it will not be beneficial for you. If you want to benefit of your investment, so it is very important to invest for long term. The second tip is investment market are highly volatile. The equity market in the current time are experiencing high volatility. The high volatility can result in equity investment generating negative return. In such a case, it is advisable to buy dips and staggered investment for more than 6 months. Taking such measure will help investor build equity exposure in the portfolio of the investor for an investment horizon of more than 3 years. The third tip is considering having a fixed income portfolio. As we know that equity market remain volatile in the current pandemic situation, having a fair share of fixed income investment instrument can be profitable step towards wealth management. Even though interest rates are seen declining during the current times, there are few opportunities like 7.75 interest paid on Government of India saving bonds with a lock-in period of 7 years that can help generating stable returns. Other fixed income investment that can be explored including banking and PSU debt funds, short-term debt funds and bank FDs that can help in optimizing portfolio returns. The other thing is gold investment. Gold has been a preferred investment avenue for years. In the current situation when the economy is heading towards recession, Investors and individuals are hesitant about investing in gold. People are looking for suitable investment avenues that can be easily liquidated during the downturn. This is where the yellow metal comes to play. This is very known thing. Gold has always been a safe investment asset with no counterparty risk. It is expected to retain its value even in times of recession. In light of low global economic activity and a low rate of interest across the globe, gold is an asset class that is expected to perform well. You can consider buying sovereign gold fund that generate an interest income of 2.5 annually with gold price linked upside. You can use it through your internet banking or iMobile app. The last and foremost important thing is considering international investment. It is always advisable to invest in international investment avenues when diversifying your portfolio. Investing in international equity helps in diversifying country risk, credit risk, and currency risk. It also opens opportunity to invest in companies dealing in technologies, healthcare, and other sectors that are not available for investment in India. For instance, you can prefer adding US equity and technology oriented funds in your portfolio to generate higher return with diversified risk. In order to manage your wealth profitability and effectively during times like COVID-19, I have told you that it is very important to keep in mind to reassess your financial goals and objective of investing. Before putting your hard earned money in any asset class, it is advisable to reassess your risk taking capacity. The other golden rule I have also tell that you don't have to put your money in one basket. Thank you.